One to another episode of Understanding of Bias, your drawn liquidity and the narrative, and how to form a trade idea. Right over here, if you see, I have few protocols to point out to understand the drawn liquidity. Okay, the first one over here is the IPDA data ranges. I have a full video on IPDA data ranges, but let me just go through a few pointers. This is the algorithm which gives you a secret, passage to understand the drawn liquidity, or where the price will draw to next, or until when the price will draw to. Okay, and these are the footprints of smart money. Actually, this is how every single time you see the four phases are forming: the accumulation, the expansion, retracement, and reversal. All right, this is the algorithm which works on every single time frame, and it's continuously working. All right, it's working always. So let me just give you an example over here. Let's go on a daily. Here we are on the daily time frame of gold. Over here you can see Ovanda, but I just used this, I don't know why, but use forex.com. all right, but let me just give you an example of what actually is like in a very, you see the 20 days look back, the 20 days look forward. Okay, just look at this, don't go beyond, just look at this, the 20 days look back period, the extreme highs of the 20 days look back, and the extreme lows, the lowest low and the highest high. These are your playgrounds, and the PD arrays in between, like this FVG, this low, which is the, I guess this was the FOMC or something, this was data right there. Any data candle is really important, guys. Okay, because it either leaves a lot of liquidity below or leaves liquidity above. Sometimes it's really important. So right here, if you can see, this is the clear buy side liquidity of the previous 20 days. Okay, price is currently in this FVG. Okay, the first FVG of the this thing, the 20 days, but currently we are in the premium of the data range, premium, and this is the discount. Now if you want to sell, you always sell from the premium, and if you want to buy, you're gonna buy from the discounts, right? But that does not mean that you're not gonna buy from over here in this range. You can buy, of course, because there are ranges in ranges, right? So over here as well, you can see this is the premium of the this is the discount of the premium range, and then you can keep going on and on and on, because price is fractal, and these ranges it can help you to understand and form an idea. But for me personally, what I would like to see is price dropping down towards the equilibrium. All right, right here, giving us a confirmation or something, and then moving right back up to take the buy side liquidity, and then we move towards the sell side. Or it can directly shoot up, all right, mid of the 20 days, mid of the month as well, directly shoot up, give us a confirmation, okay, and then continue moving downwards towards the equilibrium or towards the direct sell side. Anything can happen. It all depends upon the affairs which are going on, the current affairs, the politics. Okay, so these are the idea about IPDA data ranges. This is your high, this is your buy side liquidity on a daily time frame. Look for sells from here. If you are here, look for sells majorly. It does not mean that you won't look for buys. You can, but risk low, and only if you have extreme confirmation, only then you can buy. But if you are in this zone, you can buy, of course. But here, look for sells majorly, like 80% of the time you should be looking for sells. Okay, until the finish of the 20 days right here, and then there will be a change in the trend. Make sure you mark out all the PD arrays like FVGs and major lows and highs of this last 20 days, so that it gives you a narrative. Now in this FVG right here, if we close below this, example like this, if we close below, okay, then this FVG becomes an IFVG. From here on onwards, you can look for shorts. Then onwards, look for shorts towards the equilibrium or towards these lows right here. You understand? So this is the idea for the data ranges. And let me just close this because the laptop is actually like slowing down. I don't know why. But anyways, let's get back. We have our weekly profiles. Okay, let me just give you a few examples of weekly profiles. So here we have Monday, consolidation, classic Tuesday buy of the week, meaning low of the week. You're gonna have to buy. There is a key level over here. Always you look for buys. All right, so this is your Tuesday low of the week. If you are on the Tuesday low of the week, you have to make sure that you are in the either the low of previous week low, previous day low, previous month low, anything, any particular PDA array over here, there will always be. You look for the third quarter on Tuesday and look for buys over there, or maybe in the London session, the manipulation session. All right, look for buys in London. If you do not like get into the buys, look for a continuation buy in New York. All right, and then keep holding it till Thursday. Look for a PD array over here or your drawn liquidity. The opposite is, sorry, the classic Tuesday high of the week. All right, Monday consolidates, manipulates Tuesday, distribution, and then Thursday reversal, and Friday close. All right, these are the ICT's weekly profiles. You have to go through them. You have to go through ICT's channels. These are just, I'm just going through all these things. All right, now this is the Wednesday high of the week, because this is the third quarter of the week, and when it forms the high, it's really high probability. All right, if you find a high, a sell, or a buy in Wednesday, do not miss it, guys. Do not miss it. If you miss it in the Tuesday, in the London session, look for a continuation sell in the New York session. All right, the opposite is Wednesday low of the week. The same scenario, everything is the same. Monday accumulates, Tuesday takes out Monday high, and then goes to Monday low and to a key level, higher time frame key level, and then we continue towards the upside, because Wednesday is the third quarter of the whole week. First quarter, second quarter, third quarter, fourth quarter. Fourth quarter is the expansion or the distribution, and then you look for reversals on Friday. All right, that's the weekly profile. You have to understand where you are on the week. Study the weekly profiles of ICT. I urge you guys. Okay, now third one is, where is price in terms of premium or discount? It's the same thing. Where are we in the category of price? Where are we? Are we in the premium or discount zone? That goes for the 4-hour time frame as well. Let's suppose in this range. Let me just delete this. Let me delete this one as well. Okay, why it's not, what's happening? Oh, right, all right. I had the brush selected. Let me delete this one and this one. Let me clear this out. Okay, right here in this dealing range right here, where are we? We're in the premium. If we are in the premium, you look for premium PD arrays. Okay, rejection blocks, order blocks, breakers, your FVGs, IFVGs, everything you look for in the premium zone. All right, to sell. And then once it drops down towards the equilibrium, then you look for a buy. Okay, the same scenario goes over here. If you are under this zone, let me just go on the 4-hour. It's much cleaner. Over here you can see we have an FVG. This was the data candle. Yeah, I was right. So this candle as well is going to play a really major role in the price action. So keep an eye on this, and keep an eye on the equilibrium, because there are a lot of reversals formed towards the equilibrium. So you might see price dropping down over here, faking out, taking a lot of stops, and then continuing upwards and then moving back. All right, so you have to understand where you are in the price in terms of premium and discount, and you can of course refine it, like this zone right here. We are we have to sell in the premium, we have to buy in the discount, as you can see, and it goes on and on and on. All right, what's the market profile? This is something which I learned from Romeo, because market structure and market profiles is something which is different. I have a depiction of it over here. This is your daily key level or a 4-hour key level, anything. It can be an order block, a rejection block, or old low, or anything. You have a smart money reversal over here. Now you see price is rejecting lows right here, breaking highs. Range rejects low, breaks high. Range rejects low, breaks high. Range rejects low, and then finally reaches the drawn liquidity. And there is always a turtle soup before the final liquidity is touched. All right, just like that. Profile the markets like this, guys. Profile it, like, understand that. You will see it once you go through the charts, and you will see it. This is the range, key level, drop, smart money reversal, or whatever you want to call it, entry, accumulation, turtle soup, reject the highs in a sell program, break the lows. Accumulation, reject the highs, break the lows. Accumulation, rejecting highs, final high, and then the drawn liquidity right there. So understanding the market profile, actually, it gives you a kind of a narrative that yes, after an expansion we're going to see an accumulation, retracement, reversal, or an expansion again. All right, accumulation, manipulation, distribution, AMD, accumulation, manipulation, and distribution. So this plays a major role as well. And are we respecting higher time frame PDRAs? What do I mean by higher time frame? I mean daily, weekly, monthly, 4-hour. Don't go below. Of course, you can use the lower time frame PDRAs if you're just scalping, but for me, I look for at least towards the daily or the 4-hour. So over here we have this PDRA right here. The first FVG, the last FVG towards the premium. We have this FVG over here, daily. Okay, if we sweep, like if we flip this, sweep through this, and then close below, this will be an IFVG. All right, so it's a premium array for you to sell from. And then over here in the discount as well, you have this major low along with this FVG right there. Okay, and you have this order block. You can use the previous highs and as well, like the highs of previous IPDA range. Okay, so which PDRAs are holding as of now? This one, you can see we are being held in this right here, this PDRA. And price, since it's the first week, okay, it's the first week of the month, it is kind of choppy. But yeah, a lot of people have traded these zones as well. I personally did not because of NFP. Next week I will, and I'll share the live trades as well with you guys. All right, and on top of that, if you see, if we are respecting one particular PDRA, we're gonna have to make sure that we take trades on the right time from those PDRAs. Right time meaning the third quarter of the day and the third quarter of the third quarter. I have a video, you can check. Daily order flow, of course, bullish. We are bullish in this up until the point of the IPDA data range date, right? From here onwards, you see we have turned. I have a video, of course, you can see in my list. From this moment onwards, we are seeing an accumulation and then a retracement, and then we might see a reversal. So daily, you see over here, we are rejecting lows. Okay, we're being stuck now. Rejecting the lows over here. We have rejected lows here as well, rejecting the lows. All right, turtle soup. You can see these things playing out left and right, but you have to make sure that you understand the where you are running in time. Okay, if your order flow is bullish towards the IPDA range, look for bullishness. All right, look for bullish ideas until and unless you reach a point in time where you have to shift your trend, or else just wait for the market to play its part. And the final one is high time frame CRT. High time frame CRT, what do I mean by high time frame CRT? Always look for a higher time frame candle to see if it is turtle souped or not, like over here on a weekly time frame. This candle right here is your range. This is the previous week high, this is the previous week low. I'm using the weekly time frame now. If this candle closes like this without taking the high or the low, this is the inside bar of this week. Okay, now the second week, I want this week to expand towards the either direction of this range. If it goes towards the high and then turtle soups it, my drawn liquidity will be right here, the low of this week. Understand this, guys, understand what I'm saying. If this is the inside bar, the next candle will be an explosive candle, meaning it will be violent and volatile. I want to be in the sell from the previous high of the week, this range, CRT range. If this turtle souped, closed below, this is my drawn liquidity. My narrative, because we took out this buy side liquidity from here, our target is the sell side. All right, simple as that on a weekly level. You're gonna have to form your trades accordingly. Forming a trade and the idea of a trade is a different video, but I want you to make sure that you follow these protocols. Okay, for example, over here. Okay, which one particular scenario shall I give you guys? Okay, right here we have this candle right here. Okay, and then we have this closed above right here. What do you mean by close above? Which means we have higher prices, right? It closed above this range, right? But until and unless our drawn liquidity is over here, right here on a daily time frame. Okay, this was a major turning point because this was the data range shift from this place right here. So this CRT is still valid. It's still valid. We look for sells over here because this CRT is valid, because we are in a no man's land, actually, price discovery. All right, this can be the actual high and the exhaustion over here, and we'll be looking for a low. But if you want to see the actual drop, actual drawn liquidity, the weekly and the daily are they are literally like treasures, long lost treasures. All right, it's right in front of you, but you do not see it. Wait for this candle to close, wait for the next candle to either take the low, there is an FVG, or take the high, all-time high. A lot of stop loss will be here, a lot of stop losses will be here. Look for sells over here, look for buys over here. I just gave you an idea. Look for it in your own studies. Okay, and I'm going to make a video again sooner, and same goes for the 4-hour time frame as well. Took the high, this one particular candle right there, this order block, this 1-hour order, 4-hour order block is the order block which is forming all these drop, all these major, every single time we come to the that order block, we're dropping again, dropped. So the same idea. Look for major PD arrays in the premium, and then look for structure shifts, and then frame your ideas from it. All right, so I hope I helped you guys with some things in this, and I hope you enjoyed the video. It was a long one, actually. I apologize, but it had to come forward, and I hope that you took some notes, and we'll see you next week in my live trades. All right, good luck and good trading.